Yeah, this will be recorded 100%. I'm now recording. I will start again. Okay. Okay, so yesterday we were discussing how to draw the levels for the NXOG, the matrix of gaps, based on we are going to refer the monthly open, and since we don't have any new month opening gap above the marketplace, this is a monthly candle. You can see how all the monthly opens now are below this one. In close proximity from February, we have January inside of this current monthly opening. You can see how we gap higher, we reprice again the yearly or January open, and now we are leaving this gap, and my targets are gonna be based on this range from the monthly open or this new month opening gap in close proximity. I'm gonna look for something that another gap or a swing high on the hourly or daily chart, near to this portion of this range here. Okay, so the logic is really simple. Do you see how we close below, we fail to displace lower, we close again above the monthly gap, and we are going to use the 50% of the new month opening gap to look for a point of invalidation if we are going to again continue to move lower, or if we are going to continue to move higher to outside of this gap. Okay, so now we have this range here, and we can see now in the hourly chart in close proximity to this range we have this imbalance here. So this will be the draw for now, using the logic of the monthlies, the gaps, and you can see how on the hourly chart we fail to close below this quadrant here, and we close above the 50%, the consequent encroachment, and the monthly gap on RTH. We reprice on electronic trading hours here, this new month opening gap, and now we were trading just above the consequent encroachment of this new month opening gap, and now we are leaving and targeting the external liquidity in relation to this gap. So for me, I'm down for today. I close the trade here, exactly here. Okay, so now when the next week is gonna open, if we have not reached the external liquidity, imagine, I don't know, that the next week, this is just an example, it's not like I'm anticipating like from here. Okay, imagine that, and the next week we have now the new week opening gap opening here, and the next week, now this point of reference now is not gonna be the new month opening gap. We are going to refer to the external liquidity, the new week opening gap, and the external liquidity above the gap and below the same, but for discount. Okay, this is a protocol. Okay, so now for the new week opening gap that's gonna form the next week, we are going to anchor or select in close proximity the new month opening gap, and this way we are referring where the new week opening or the weekly gap is in close proximity to the monthly open. Okay, so, and where is the new week opening gap in relation to the external liquidity? And we are going to have implied dealing range to trade based on this profile. So we're anticipating if we are going to keep looking for higher prices or looking for discount, we are going to frame our trades based on these 50% levels basically, and the quadrants above or below here. So for this week, that's what I told you yesterday. Once we are leaving the new month opening gap, we are going to refer to the external liquidity here. Even if we have another new week opening gap here, I don't care. We are going to use the monthly and the external liquidity, and once we have another new week opening gap, we are going to refer to the actual new week opening gap, to the new month, and to the external liquidity. And this will be dynamic for every week until a new month opening gap is starting again. And we are going to refer every week, every month, using this range to frame trades based on the 50% or the quadrants and targeting the next level. Okay, so basically the logic is, where is the new week opening gap in relation to the new month opening gap, and where is the opening of the daily range based on this implied range. Okay, so this is based on fair value from the weekly. It's found inside of the gap of the new week opening gap, and fair value from the new month opening for the monthly candle, it's found inside of the new month. So to know if we are premium or discount in every week, we are framing these ranges, and in relation to the daily, we are going to use the weekly and the monthly. So you don't want anything else. The only other levels that I have in my chart basically are the highs and lows that I told you here. But this is just, I like to follow these levels also. So now, for example, we are leaving November high and the monthly openings. You see? So the next target, if we move on to the hourly chart, should be this imbalance that is aligned with the lower portion of this range here. I'm not saying that we are going to reach that level today, but this is the draw for now. And once we are leaving here, if we want to reach the 50%, ideally we should look for longs just near or close in proximity to this level, to this range here, because this is discount from these quadrants, you see? Okay, so we want to see if price does something like close above here and targeting again now the 50% and external liquidity here. Okay, so this is how you should use the ranges or quadrants and look for trades based on this. What are those green boxes again? Okay, this will be recorded and I will upload this, but basically these ranges are quadrants to measure ranges in relation to the external liquidity and the monthly open. Okay, Look, for example, today. I was looking for discount because we were trading inside of this quadrant of this new month opening gap here. I was looking if we can move to the 50 this order block or this one, or take these sell stops. But since yesterday, if you see, we accumulate inside of the consequent encroachment on regular trading hours of the new month opening gap, there was no reason to come back here. I didn't realize that until we were closing above the 75% of the new month opening gap. So for me, because we close above here, my confirmation now is I'm looking for the next level of the gap. Okay, so I look for a PD array in close proximity to the 75% range of this monthly gap here. You see 75, and this is a array from PM session yesterday. And you have here the array. We create this BC on the 1 minute chart. And we were really close to the macro here. So because of the volatility, I can trust that we don't need to trade inside of the macro. This was the macro here. And because of that, I'm trusting that price is not going to come below this candle. So this was my stop loss below this candle, and this was the trade here. This BC from here, based on PD array from regular trading hours and the 75% of the new month opening gap. So even if I am in premium of today, because we are trading above the new week, the regular trading hours gap, I'm trusting that I am in a quadrant. We close above, and now I'm targeting this. And the target was the external liquidity in close proximity to the new month opening gap, this one. So it was a decent trade, like 120 points. And remember the other day that I told you about the 75% level, and I took one trade based on that specific range. I don't remember what day was, but PD arrays that form around these quadrants are really nice. Okay, so this is how I use the new month opening gaps, new week opening gaps, and the quadrants of these ranges. So this helps me to frame my bias and look for a trade based on where we are in relation to the gap matrix, or NXOG, that I like to call, because we are considering the monthly, the new week, and the daily regular trading hours gap. Do you have some rules like don't take a trade before open, for example? I don't trade overnight. I've been backtesting and doing like demo trading on the Asia session, but I prefer to wait for the AM session always. And one of my rules is trade very close to the macros or around the macros. See you, hermano. Have a wonderful day. So if you have any questions about this, please let me know. Okay, the text, it's really simple. You have a fib and you put here the cursor and set add text here, and you can type whatever you want. You can choose if you want it center, top, but you have to enable this function here on the fib text. Okay. We didn't need to go lower. Why again was the PM sell stops and the reaction from the new month opening gap. Yep. Yeah, and also we had an SMT. Look how ES reached the 50%, beautiful, the consequent encroachment, and we use this auto block on ES. This is like a beautiful turtle soup because we failed to reach the auto block. Yeah, it's been recorded. And now look how ES is almost closing the gap. This is like the six sister conditions. ES has been delaying the delivery, but at the end we should close the gap. Look, this E of it on the 15 minutes here. %50 of this week. Would you say price wouldn't come back to the opening gap most of the time after they have been filled? No, not always, because that's the one of the profiles basically that I trade is the deceiver. Like we can do like this. We open that trap and then rebalance the gap and then reverse. So that is not like a rule like I'm expecting once the gap was rebalanced, like we are not going to come back again. No, you should consider like the framework based basically on this, your trade based on the gap matrix and the levels, and you are framing the profile based on the levels and the framework on these high time frames ranges. But the gap helps you to understand better like the dynamics of the 9:30 opening. Any other questions? The next week, when we have the new week opening gap, I will tell you how you are going to measure now the quadrants based on the external liquidity and the new week opening gap and new month opening gap. Yeah, Reapers is one of the best PD arrays. It's not like my favorite, but the framework based on gaps on those arrays are just wonderful. How do you deal with 10 a.m. news? Do you close before it? No, I don't close it. When you're expecting like a big move, the news should support the narrative of your trade. Maybe can stop out many times. That happens a lot when price is not like this expanding like today with this volatility. Many times when the news is released, you can stop out at break even, or you should wait for to see another opportunity to enter. But no, it's not a problem for me to trade before the news release. Yeah, exactly. If manipulation has occurred before the news event, the macro after the news will continue the move just like that. Yeah. If the move has not happened, the manipulation, then the new release is gonna be like the Judas of the protraction for the move that you are expecting. So after the new month opening gap has formed, you don't refer to new week's opening gaps, just new ones? Yeah. Yes. One of the reasons for that is because if you are considering like previous new week's opening gaps as a new areas for reaccumulations, because those levels are fair value from previous weeks. So instead of framing your dealing range based on those levels, you are considering the external liquidity from the monthly candle, and you are gonna find many times, most of the times, that these gaps, previous new week's opening gaps, are gonna be aligned with these quadrants of these ranges. So when price is expanding, all gaps should act as a new areas for reaccumulation for price, because those levels are fair value from previous weekly opening. Okay. Yeah. Okay, so if everything is good, if you don't have more questions, I will close the live stream, and I will record. It's recorded. I'm gonna be. It's gonna be uploaded here to the channel. Yeah. yeah, definitely I will do some live streams on a weekly basis. Yeah, I will try to live stream at least 2 times per week. So have a wonderful day. Enjoy your day and don't overtrade. See you.